So guys, indices have a special place in the world of stock market, both from investing and trading perspectives. And that is the reason why on this channel we have created several videos on popular indices such as Sensex, Nifty and Bank Nifty. And today we're going to talk about a budding star in the world of indices, that is FinNifty. So let's get started. So what exactly is FinNifty? So the first thing to know is FinNifty is just another name for Nifty Financial Services Index. Now, this index was created back in 2021 to track the performance of stocks in the Indian financial market, right? So think about banks, housing finance companies, non-banking financial companies, insurance sectors, right? So the index aims to track how the financial sector of India is performing. Now, one of the interesting aspects about FinNifty is that just within a couple of years, FinNifty has become very popular both among investors and traders. Right? So today it is widely used by mutual funds and other institutions for benchmarking the performance of their funds, and it is also becoming very popular among traders who plan to trade in futures and options in this particular index. So we will discuss about the trading aspects later in the video. But first, let's understand what constitutes FinNifty, right? So what exactly is it made of? So FinNifty is an index of these 20 stocks, right? So you can see here, these are the stocks that make up FinNifty today. And as you can see that some of the bigger names like HDFC Bank, ICICI Bank, HDFC, Kotak Bank, they carry a much higher weightage as compared to some of these smaller companies out there where the weightage is very minimal. But let's take a look at the same thing from a different perspective, from the point of view of the sectors to which these stocks belong, right? So if we classify these companies among sectors, we can broadly put them in three categories: banks, NBFCs and insurance. And as you can see that the weightage of banks is about 65%, the weightage of NBFC companies is about 25%, and that of the insurance companies and rest of the stocks is about 10%. So clearly the banking stocks, especially the private sector banks, they are dominating this index at least as of today, which is also a reflection of our economy, right? In our economy, the banking stocks are much more predominant than insurance companies, for example. But there is one thing to keep in mind that not very far from now, a big company is going to enter in this particular index, and the company is LIC, right? And after the entry of LIC, some of the weightages that you see here will definitely change. Most likely what will happen is that the weightage of the banking stocks will come down and the weightage of the insurance companies will go higher. So that brings us to the next question, that who decides which stock should be part of this index and how exactly is it done? So this index is maintained by National Stock Exchange, and they follow a very simple process to select stocks for this particular index. So NSE basically says that, you know what, we will look at the top 500 companies in India, the best of the best. And they already have the list that they call as Nifty 500. Now, if we consider these 500 stock to be the eligible universe for the selection of the stocks, the next step is to calculate the weightage of each subsector based on the market capitalization model. Now, what does that mean? Well, market capitalization of any company is basically the number of shares of the company multiplied by its market price, right? So when you add the market capitalization of all the companies of a subsector, you get the weightage of the whole subsector, right? Now, after the weightage of each subsector is decided, the companies within each subsector are then sorted in the descending order of their market capitalization. And the idea here is that NSE is trying to see who are the top performers in each subsector, and the top 2 or top 3 and sometimes top 4 companies are then selected to be part of FinNifty index. Now the actual process can be a little bit technical, so you don't need to worry too much about the logic behind this. This is broadly how things work. Now just because the stock has entered in the index doesn't mean that it gets to stay there forever, right? So every 6 months NSE does something called as rebalancing, which basically means that it checks whether the stocks that are part of index right now, are they still eligible by the criteria that we talked about, and if not, then NSE replaces that stock with a stock which is performing better, right? So in the world of stock market, that can also be perceived as natural selection. Now FinNifty, or Nifty Financial Services Index as it is officially called, is not the only index that NSE has created over the years. It has in fact created a lot of them. So when NSE launched this particular index, a lot of people, including myself, asked that, why create another finance index, right? Because we already had a Bank Nifty for the banking stocks, and which has been there for quite some time and is very popular. So what is the point of introducing another index which pretty much looks like Bank Nifty, right? So if we compare this index with Bank Nifty, 65% of overlap is right there in front of us. So the practical reason to understand here is that NSE, who is launching all these different indices, they want to make money, right? And they have tried with different indices. They have tried with Nifty IT, they have tried with Nifty Mid Cap, and they have tried with different models. But the thing is that the majority of participation when it comes to trading and investing, it comes from the foreign institutional investors. And these guys are much more active in the financial services sectors as compared to the IT sector or any other sector for that matter, right? So NSE doesn't really have a choice, right? So if they want these investors to trade more actively or invest more actively, they have to give them another variant of the financial services, which is essentially the reason why this index has been created. And even after the introduction of this index, both Bank Nifty and FinNifty are doing perfectly fine. It means that there was space for having one more index in this segment. Now, the last and the most important aspect that we need to understand about FinNifty is how it can be traded. So for that, let me take you guys through a real life scenario. So guys, I'm logged into my Zerodha account, and the first thing that we will do is to look for Nifty Financial Services Index, right? So this is how you do it. But can we trade Nifty Fin Services Index? No, we cannot, right? So if we have to trade Nifty Fin Service Index, we have to trade it via futures and options, and that is where FinNifty comes into picture. So as you can see here that we have both futures and options. So let's go one by one. Let's start with the futures. Now I have picked up the current month future for FinNifty, but as you can see that it is not actively being traded, right? So you see all these dashes here, that indicates that no trading activity happened during that time. So with the lack of liquidity, it is very hard, at least as of today, to trade in the futures of FinNifty. But let's take a look at the option segment to see if there is some better trading activity going on there. So I'm going to look for at the money option here. So let's say FinNifty 18,000 call option. And as we can see here that the trading activity in the call option is much better as compared to that in the future. So at least at this point of time, if we have to trade FinNifty, it is much better to trade it through options. Now let's do one thing. For the sake of fun, let's just place one order for this call option and see what happens. So what I'm going to do is I'm going to buy one lot of FinNifty. So you can see that the lot size for FinNifty is currently 40. This is basically what trading in FinNifty looks like. So guys, this is it. This is basically what FinNifty is. I hope that from this video, you got a big picture idea of what this index is all about and how you can use it for both investing and trading purposes.